this strategy since we began publishing live trade alerts in 2008. We were only 2 weeks in 2008, so that really doesn't matter that much. In 2009, you can see the alpha that was given. The market popped after the crisis, 23%. The system provided a return of 54. In 2010, we had 13 in the S&P, about 30% for the system. 2011, hey folks, this shows, this is not magic. We're humans. We're using a system. No system works in all environments. 2011 was a nightmare, if you recall. We had the downgrade of the debt of the U.S. We had the European crisis going on. It was just a mess. And anything that was active got slaughtered because markets were moving up and down 9% at a time over a very short period of time. So you had intermediate-term moves on a short-term time frame. It did not work out well. So this is why you don't put all your eggs in one basket, folks. This is why you have diversified your portfolio by strategy. This is a very nice alpha add strategy, but it's not the only thing you should own, for sure. 2012, return of 19 versus 12, and then last year we had a gain of 47% versus 30. I think the key is in 2013, we didn't have enough stocks to buy, and we had about 30% cash most of the year, so the alpha wasn't quite as strong as it should be. Here are our current insider holdings, and there's no guarantee how long we're going to hold these. How much time do I have here? 5 minutes. So I'm going to skip through these pretty quickly. These are things that we actually own in the portfolio. What I'm going to do is look at the chart and tell you what we're thinking and what we would do right now if we did not own the stock. So here's some actual ideas for you. Ready? Stillwater. Okay, as of Monday, we would have bought that. This was put up there last Monday. So we've owned Stillwater, doing pretty well. It's got a very nice consolidation. I'm going to call that some sort of handle. I would go ahead and add to Stillwater. Cons. This has been popping very nicely thanks to Mr. Ackman announcing that he was investing in it as well. We were in it before the announcement. We've gotten, you can see, look at this. This is what we're describing. Death. Base. We're buying. We get the pop. Ackman announced Pershing Square. Ackman announces he owns it, and we've been loving life ever since. Right now, I think I'd hold that. Limonera is still setting up. We'd be buyers here. This is, as you can see, got a basing pattern going on. We own the stock. I would buy it here. GrafTech, again, a very, very nice buying opportunity right here. As we're still in that consolidation range. I should let you know that we sold a lot of stocks last month, so we're replenishing the portfolio. So these patterns are going to look fairly similar. Tile Shop Holdings looks like it's ready to break out and fill that gap. So we're going to take a shot here. Actually, I'd like this base to be a little longer, but since this gap is so substantial, we're going to go ahead and take a shot at it. Trustmark, not real happy with this one, but as you can see, it's beaten up, tried to bounce, came back, bottomed, classic double bottom, good opportunity to buy. Ruth's Hospitality, basing also, as you can see, similar. You can see we buy the same thing over and over and over again. So we've got a nice base here. We would add Ruth's. And Calm Vault, I'm really kind of worried. We might have bought this one too soon. So we're going to hold that above, say, 48, and after that we may have to cut it. We also have 20% cash for opportunities. We usually have keep some cash, and again, my apologies for zipping through this, but I wanted to get to this part. So, okay, these are stocks that we were looking at. This was our list on Monday morning, last Monday, and so let's go through these charts and say, do any of these stocks have what we're looking for? So let's review. And the Andersons, these are food distributors. Okay, oh man, there's a slam, right? Down from 65 to 45 in a month. That's pretty darn ugly. So remember our criteria. We have a 5 rating. Okay, we've got a 5 rating. Got that, good. It's beaten up, left for dead, oversold, yes. But the problem is there's no base. So you can see it popped immediately. It's probably going to go down and retest that low. That's what history shows. Again, I'm not predicting the future. I'm just saying I'm not willing to buy this stock at this point. And here's the Andersons from a weekly basis. If you're unsure, you look at it on a weekly basis to see where are we. And folks, Anderson has been a momentum play that is correcting from a very large gain. So this also says, this isn't our style. Cognets, what are we looking at? A little better. I like this. We've got a little base, tried to pop out, came back, tested that breakout area. So I'm going to look at this. Oh, but there's the weekly chart. This is a Momo run. I'm just not interested. Cree, it's in semiconductors. Ugh, there's an ugly chart, right? We've got a little base going. Let's look at it weekly. Okay, it's not death. like it was in 2011, 2012, but at the same time, it's not a zooming off to the moon shot either. So I will look at that. Dick's Sporting Goods, specialty retail. You can see already no base. Again, I'm not ready to buy that. 8x8. Anybody ever heard of 8x8? I hadn't. So what we have here is the death and destruction part. It is occurring. Insiders are buying, but again, no base. I want to, as you can see on a weekly basis, does that look done? No, it does not. So we're not going to jump in there. Glacier Bancorp, again, never heard of that one. Nice double bottom there. I kind of like that. Chart basis, it's had a great run, so I'm going to hold off. If I had to buy something, I would probably buy that, but I'm not going to jump up and down for that. Here's an oil and gas equipment company. Interesting. I'm more interested. What's it look like weekly? Okay, now we're talking. Here's a stock that nobody wants. Here's a stock that's been going nowhere. So if the insiders are buying and buying heavily, we might have a shot. So Geefy, we go ahead and take a look at. SideQuest, similar situation, big dive, no base. Give it a little more time. But this is definitely something I'll be watching very closely and would consider buying if it got there. So to review once again, we buy what the insiders are buying, but only when, everyone now, when they're buying heavily. Okay? We want a chart that's beaten up, crummy, left for dead. That stock will then either pop or break down quickly. So we have our targets. If the stock pops, we've got a winner. And then we look for the pattern to unfold. If it breaks down, we already knew where our target, our sell stop was, so we get out of that and cut that loss quickly. And once it pops, you got to manage risk on a daily basis. So how do you employ this approach? You can use it as an idea generator, as we talked about, or you can create your own insider portfolio. This is something that you'd use for a portion of your overall investment portfolio. I think the trick is to not force it. Don't just buy a stock because it's going down. You've got to have all the conditions. You've got to have the insider buying, and you've got to have that base. And also, fans, we've got to manage risk every single day because these stocks are not for widows and orphans. These things move. Again, here's the performance of the portfolio that we've done. We've outperformed the market by a significant margin. We've stumbled at times. This is reality, folks. This is the reality of investing business. Here's some of our top 15 closes. I'm not going to skip that because I want to. These are some of the stocks we've sold recently. As you can see, that we sold some things in May, which created a lot of cash, which means we're buying some new stocks. I wanted to let you know at the bottom there it says, if you want to see every single trade we've ever made, the good, the bad, and the occasional really ugly, the great thing about MarketFi is it provides, you can go to MarketFi, look at the insider buying portfolio, and click on the closed trade history. It shows you everything. The great thing is MarketFi verifies everything we do. So I know what you're thinking. How can we do this? How can you benefit from this? Where do you get the data? And it turns out you're in luck. 3 minutes left in the presentation. I want to tell you, this is the part where I know you're rolling your eyes, you're dreading it. This is the pitch, fans, and I'm embarrassed a little bit by this because I'm not a pitch guy. I don't like making sales pitches. But I will tell you that I believe in this approach. My own money's in this strategy. My parents' money is in this strategy. My clients' money is in this strategy. So I believe in this wholeheartedly. I think it is one of the coolest ways to select stocks that I've seen, and I don't see it anywhere else. So we've got this insider research is available to everybody here. You get real-time alerts to the insider's portfolio. You get daily strategy and portfolio updates with performance updates. Okay, we don't hide about if things aren't going our way, we're not going to not show you performance that day. Every single day we tell you what the performance of the portfolio is. We also tell you what's going on in the stocks and what we do with it. As a bonus, you'll get our daily State of the Markets newsletter, which is I call it my meandering morning market missive, which talks about the driver of the market every single day. The offer here is pretty simple. I believe in this strategy wholeheartedly. So what we wanted to do was to give people an opportunity to give this a try, and I would encourage you to do so. I don't see why you wouldn't. We're going to have you buck up a dime a day. Okay? So what you'll get for a month is real-time trade alerts via either email or a text message. You'll get the daily strategy and portfolio updates. You'll get my newsletter, and it's available to all the attendees for this webinar for a limited time. Obviously, you got to have that. Normally, it's $50 a month. but what we're doing for this Diamond Day is it's $3. That's essentially a free trial, but I don't want every Tom, Dick, and Harry screwing around with these stocks. So I'm going to demand that anybody who's interested in this strategy at least buck up, a couple bucks to show us that they're interested and to make it real. How do you do that? You go to vip.marketfi.com/insider. And if that could be thrown up in the chat box, I'd greatly appreciate it. Again, it's vip.marketfi.com/insider. Again, not a pitch guy, not hard sell. You're not going to get spammed. We're not going to send you stuff. We are professional investors. We offer a service. If you like it, heck, go ahead and use it. If you don't like it, no hard feelings. But that's what this special offer is designed to provide you with. So that's it for me. I'm going to leave that up there in case anybody wants to go to that website. Let's see, time-wise, I think I'm dead on it. Yep, 9:30 my time in Mountain.
You are dead on, David, and thank you so much. I did send out that link, and thank you as well, David, for the great presentation today. I learned a lot myself from techniques that I personally use, and you confirmed a lot of things that I've seen in my time in investment. So thank you for that.
Thank you.